This is a bull flag formation on the dollar. The US dollar, again, is putting in a bullish consolidation pattern. There you go. I see a bunch of you guys typing in flag pattern. That's exactly correct. So what can we extrapolate from this setup? What's the probabilities? And remember, everything technical that I do is all about probabilities. So ultimately what this means is whether or not the dollar goes up today or next week, this is telling us probabilities are the dollar is going to start to move higher. What does that mean for risk assets? Should we expect upside in the market or downside? And the answer is downside. In the crypto markets, would we likely see more downside? The answer is yes as well. If the dollar is moving higher, we likely will see downside in risk assets. All right, where would the dollar go in terms of a short-term target if this bull flag does start to play out? The answer is pretty easy here, right? So you have this little area right here. And again, this would be my target on the dollar. This is where I would consider buying Bitcoin again for a quick trade, or I would consider buying some stocks or the S&P or the NASDAQ. Look at this pivot low right here. Let me zoom in a little bit. This pivot low with this pivot low with this high with this high. See how it all aligns? That tells you there is a major level there as that's going to be resistance. It's a former level that was huge. We've been away from it for a little time. So if the dollar rallies up, 105.50 essentially is going to be big resistance. Okay? So that's very, very important. The other thing that you can do in addition, just to see, and again, it doesn't necessarily change the level, but it might confirm the level, do a Fibonacci retrace, okay? And interestingly enough, right around that 105.50 to 106 level is also the 382 Fibonacci retrace. So again, I like using fibs when we have sharp moves to the downside and we're getting bounces, because again, it gives us a general sense. What I'm looking for here is a confluence of levels, right? Two levels that coincide, therefore they're going to be stronger. So right away, having the fib 382 around 106 with 105 as the resistance, 105.50, that's giving me a 50-cent range where, again, and there we go, a 50-cent range where we can look for major resistance in the chart of the dollar. All right, so again, the dollar tells us a lot. Remember, if the dollar is going up, you have to assume markets are going to go down. If the dollar goes down, assume markets are getting a bounce. Okay.
The global cryptocurrency market was in for a second day of losses on Friday morning, as the market dropped 3.69%, weighed down by losses in all the major cryptocurrencies including Bitcoin, Ethereum, and Binance. Hello and welcome to Crypto Street. In today's video, founder and chief market strategist at InTheMoneyStocks.com and Verified Crypto Investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
Now, if we look at Bitcoin, again, for those of you that are members of VerifiedInvestingCrypto.com, I talked about this. I said, guys, this is a topping tail here. Topping tail is a specific candle formation that probabilities, again, probabilities are everything. Probabilities dictated that when you get a topping tail and it fits the criteria, that now you have a top in the chart. I said that on that day. Since then, we had 1, 2, 3, 4 down days, 1 bounce, another down day, and a big fall. We broke this level here. The reason why that's so important is because you now have a negation of any bullish consolidation. This was bullish consolidation even with the topping tail. It was sideways chop. You've now broken below the low of that bullish consolidation. Now, you will have support on Bitcoin right here. This is your FTX beginning drop over here. So if I zoom out, FTX news came out here. It fell. We hit it right here. You can see how it pulled back and then broke out. This will now be a scene of the crime support. If that breaks, and by the way, that's around 21,300. If that breaks, there's no support until 18,400. Okay? Now, on the upside, let's take both sides. A good trader looks at both the positives and the negatives, the upside and the downside. If we ever close above that topping tail high, all right, let me repeat that. If we ever close above that topping tail high, that is a negation of the bearish topping tail. You should expect price to go up to at least 25,000, potentially close to 30,000. All right, now again, that's a big if. When does that happen? I mean, eventually it'll happen in the next bull cycle, whenever that is. But that's what I would watch for on the other side. Okay, look at this, guys. This is not good news for Ethereum. Ethereum had this channel that I've talked about in my daily crypto videos that are on verifiedinvestingcrypto.com. Look at the break below the line. You closed below. Now, you haven't confirmed, so there is a small, albeit small, chance it can get back above that line. If it doesn't and it confirms, you'll have minor support at 1,500, and then there's no support until 1,325. Okay? So that's kind of, it's definitely like, it's borderline breakdown here. I wouldn't classify this as a full-fledged breakdown because it hasn't confirmed the break yet, but it is like, it's hanging on by a nail, like one finger's on the cliff and it's hanging over the cliff at this point. All right. So again, makes sense. If Tesla's going to pull back, if Nvidia, those are risk assets, it makes sense that crypto could be in trouble. Does it also make sense that if the dollar is making a bull flag and it breaks up, that we could also see crypto fall in this chart? Yes, it does. It all should align, right? And again, it doesn't mean it's always going to work out perfectly. We never invest 100% of our assets into anything, because any one of my trades could be wrong. Trust me, I've been wrong before. I'll be wrong again. But by diversifying out amongst multiple different trading opportunities, we limit our risk. And then again, if you're going to bat, let's say in general, I bat 70 to 80%. So 70 to 80% of all my trades are successful, right? That's generally what my history has shown. What that means still is that 2 to 3 out of every 10 are going to be wrong. So I can't bet the farm on one trade, because what if that's one of the 2 or 3 that's going to be a bust? So what I do is I spread my money out amongst those, knowing that the overall win rate will be there by using technical analysis, and that then gives me an overall net positive gain in my portfolio.
Bitcoin, the world's largest cryptocurrency, fell 5% to $21,800 on Friday, continuing its downward trend. In the meantime, Ethereum was down 4.93% and trading near $1,544.48. However, many factors could be responsible for its prolonged decline. Everything has had a negative impact on cryptocurrencies, whether it is the increased threat of hacking in the crypto industry or the most recent concern that the United States may restrict crypto staking. The global cryptocurrency market has continued to fall, dropping more than 3% on the day as new regulatory concerns frightened investors around the world. The drop in cryptocurrency prices was precipitated by reports that the United States would outlaw cryptocurrency staking. Last night, Coinbase CEO Brian Armstrong stated that restricting crypto staking would be a bad route for the U.S. As a result of the latest developments at Kraken and the SEC, BTC has fallen below $22,000, and Ethereum has lost its key support level of $1,600. Despite the market excitement generated by Kraken's recent launch of staking and settlement services in Asia, the company's activities in the U.S. have been hampered by the SEC's lawsuit against it for alleged breaches in its crypto staking services. This incident has also contributed to the current crypto market decline.
A couple other charts on my radar here this morning, guys. Let's get right into them. Number one, Tesla. We got to look at Tesla here, guys. Tesla looks like it may have topped. Look at that tail yesterday. And again, part of that was the market sell. But look at the extension move. Tesla went up a full 100% off of its lows. The most important thing is this level here, guys, all right? Let me use an arrow here. So see this low here, this low right here, that low there, and that low there. Notice how price went back to that. That's called a scene of the crime retrace. Okay, basically what I mean by that when I use the term scene of the crime is that when you break below support, when this was major support, this is the scene, right? And a crime happens. The crime is the breakdown of the trend line when it breaks below. So when you return to the scene of the crime, you're returning to that level, all right? And that, again, is going to be major resistance, all right? Again, for me, when I see the euphoria in stocks like Tesla, it's very reminiscent of 2021. Remember, the time of 2021 was a unique time in history. Interest rates were zero. The Fed was printing money. The government was sending checks to most U.S. citizens. People were staying home. So to see a technical bounce like this, and by the way, this goes for Bitcoin too, of why I'm so skeptical about the move on Bitcoin to the upside, and why I very blatantly came out on all my interviews and said, guys, I don't believe this for 1 second, that this is a new bull market, is that we now have no printing of money. We have 5% interest rates. The government's not sending us any checks. and people are now having to drive back to work. The people are now going back to work. So all of these factors are so much different than what we had back in 2021. You have to take that with a grain. So essentially rallies you have to take with a grain of salt. So again, I look at that and I do think that it probably is in a position to fail these rallies.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.